Hello, welcome to Wander Financial. Today I want to take a quick look at a option chain and just explain the basics of what you're looking at on an option chain. So here we're looking at a chart of Apple, and maybe we're trying to decide if we want to trade this. I want to buy puts or calls. So we're going to bring up our account. This is our Tastyworks account. Click trade, and up it pops. Now this is an option chain. This is a basic one. Tastyworks, they don't show you a ton of information. You can choose to look at different things here, but the basics here are delta, bid, ask, strike, and let's take a look at what these mean. So at the top we've got our stock ticker. I've got the last price traded, 202.59. The net change for the day, the high and low for the day, the current bid and ask of the stock itself. Currently this is after hours, so these aren't going to be moving, but normally they would be ticking away, changing as the stock goes. Okay, next thing here, what we're looking at is the expiration date. Now the expiration of your options, there's weekly options on quite a few stocks these days, meaning every Friday there's a set of options that will expire. Most often, still today, you'll see the monthlies, as we call them, are the most heavily traded, highest volume, and the tightest bid-ask markets. That occurs on the third Friday of every month. It used to be that options only had expirations monthly, which occurred on the third Friday. So in this case, monthly would be August 16th, August 9th, or an August 2nd would be called a weekly options. So we're going to just take a look at the monthly, the August 16th. That means whatever options you're trading here are going to expire on August 16th after the close on Friday. Okay. The other thing we're looking at here, this is showing us how many days are remaining to August 16th. We've got 27 days left. Implied volatility is 29%. I won't go into that right now, but let's take a look. Okay, the last price was 202.59. That means the $2 strike is pretty much at the money. They call these at the money. In the money would be calls that were 1.9, like the 190 strike. These would be in the money because they're currently the stock price is higher than the calls, the call strike price. That would be the opposite for puts. The 215 puts would be in the money because the price is below the strike price. So on the right side here, we've got puts. On the left side, we've got calls. We've got the bid and the ask. Basics here, the bid is the highest price that anybody is willing to pay at this moment. The ask is the lowest price that somebody is willing to sell them at. The difference between these is called the bid-ask spread. In this case, it's 25 cents difference. That can seem like a lot. It's actually about 3% of the cost of the option. That's okay. You know, you like it to be as tight as you can. The tighter the better, because you're not giving up so much to get the trade off. You might get this one at if you were going to buy these $2 calls, maybe you would get it for $7.35 or $7.40. Maybe $7.45. So you would get it somewhere in the middle, most likely. Once you placed your bid, somebody that was offering maybe at $7.50, maybe they'd see your bid at $7.40 and decide they would be willing to sell it at that price. So this is the bid ask, and that's the spread. These are the strikes, all the different strikes that are available. We've got $2, 200, 205, 210, 215. These, you can see there's 250 strikes are in here too. Those will tighten up. Those will start opening up. It changes each. You can see just back. Okay, so the August 9th, the weeklies are already carrying those. The monthlies aren't quite there, but maybe they start on Monday. So that's what you're looking at there. This column here, right now I've got it set to delta. I find the delta to be a very important number. We'll discuss what a delta is later, but for now just enough to know when we're looking at an option chain that you can choose the delta, the theta, open interest, the volume traded that day in that strike price, lots of different information. So that is a basic option chain. We've got our expiration dates, our strike price, calls on the left, puts on the right, bid, ask, the highest price somebody's willing to pay, the lowest price somebody's willing to sell. And of course all the stock information up at the top. And that is the very basic rundown of an option chain. And we'll discuss a lot more of these, the things that we can talk about, the things that we can choose to look at, information that's available. We'll talk about those later on. Thanks for watching.
Thanks for watching, and don't forget to hit that subscribe button.